I jumped too early on my first trade. My analysis, totally correct. My entry was wrong, so they got a good $47.30 off of me because I jumped too early. My analysis was totally correct. This is the good thing about trading. You're totally correct, but your entry wrong, and you lose money, right? Or you could still win money that way. You could have a bad entry with the right analysis. If you got enough money in your account, you could just stay in it. Granted, that's what I should have did, because it did come my way. You see, I only got that little $1.30 quick scalp on a buy, but my analysis was correct. I'm biased on a sell, and if I would just stayed in that original sell, it wouldn't have been a $47 loss. See what I mean? And then my account would be in profit. I mean, no matter what, I have a stop loss now, a trailing stop, so no matter what, I'm going to be taken out in profit, and my account will be, see, my equity is already over 5,000. So starting this account, look, 9:58 in the morning, but I bought it at 9:25 this morning and took that trade at 9:39. So you see, I went and bought the account after I already had a bias. Why did I already have a bias? Because I already did some research for the last couple of days. I've kind of been waiting for some news to hit so I can match my technicals with my fundamentals. Let's try to run through it real quick. We are on the 4-hour candlesticks. I mean, I already knew what time it was just off of straight technicals, off the 1 hour. When you see I said, you know, when you see this is like, they call it a shooting star or the falling star or whatever. They call it a shooting star, but it looks like a falling star, but they call it a shooting star because of the indication it makes, and it's an indication that the market should go up. So I tell people, when you see this block at the bottom, look at it like your fist, and this little wick right here, this is like your index finger. Don't look at it as the middle finger, even though it's in the middle. It's the index finger is pointing up, so it's telling you the market should go up next. And it did, but it did a little fake out because the MA line is the strongest indication on the screen. It holds the most weight out of your confluences. So when it tried, the price went down here with the candlesticks, it tried to come back above like this little structured zone right here, but it couldn't because of the MA line. It couldn't cross the MA line. The MA line was too strong, so it resisted. So now you have like a hammer. This shooting star has now turned into a hammer, and that hammer is at the top of an uptrend. So it tried to go up, but you see, this isn't really an uptrend. This is very stagnant. Tried to go up and kept it leveled. So you know, that's like those are like 3 or 4 confluences I just ran through that tell you that it should still go down. And then when this hour started and it made this pump fake, I did sell right here earlier. That was the one I should have stayed in or whatever, but it peaked up here, did a pump fake, hit a structured zone that you can't really see. I'm not gonna back trace right now or whatever, but test or back test, but you see it did the pump fake. It hit this high and then it came down here. It started doing this around 9:40. Keep that in mind. It did all this right here, this pump faking, around 9:40. Keep that in mind. So you see that I'm still, it didn't hit my stop loss. I didn't put my trailing stop too low to where it did hit it. You don't want it to hit your trailing stop. You don't want it to hit your stop loss. So now, instead of it getting taken out, if I would have my stop loss a little lower, it would have took me out at like $72. Now I'm at 115 because I set my stop loss a little higher. You see what I'm saying? Because you see, it just retraced within that hour. It was like right here, wasn't it? You know what I'm saying? And then it dropped again. So had I just put my stop loss down here, it would have took it out. I wouldn't be in this trade no more. You feel me? And that was like at $70 right here. So now it dropped a little more and we're at 100. So we're gonna go ahead and adjust our trailing stop. Keep that thing in mind though, what I just told you. This is the hard way to do it, when you just hold your finger. I'm on the phone, I'm holding my finger on the minus sign, so it's just going down. On the computer screen, you can just click the line and drag it with your mouse and place it somewhere. See, so I just put it closer because I don't want it to take out at 100. If it does clear the high that it's been at this hour, which it probably will because it's only 2 minutes into the hour, but I'll be satisfied with like a $90-something takeout. But that's neither here nor there. It's going to take me out wherever I'm going to be in profit. Bam. So why did I have a bias? Why did I say keep in mind that all that happened around 9:40? Forexfactory.com, where you go get the reports that come out. You got the core retail sales, the flash manufacturing. At this morning, I woke up So the Wall Street bell rings at 9:30. Anything that's coming out around 9:30, even 10 or 8, that has heavy in red folders. Orange is medium, yellow is normal, red has heavy impact. That's heavy impact news. Some people say don't trade news. I mean, enter at your own risk. But if you know what you're doing, you know what you're doing. 9:45 a.m. boom, USD. So why am I trading gold? You see, so everything I just showed on the technicals, it was gold. XAU is the on the periodic table. It's the abbreviations for gold. The element of gold it's AU, but when you see an X, the X is for Forex. So it's literally saying this is Forex gold versus US dollar. And you go find USD news because you're trading gold versus US dollar. So anything that has to do with the US dollar, it's going to be directly affected in gold. So I go look at USD, boom, actual forecast previous. I click on the folder for the first one. I go check the usual effect. Actual greater than forecast is good for currency. All right. What does this mean? Above 50.0 indicates industry expansion, below indicates contraction, blah, blah, blah. You can read all that, right? The US dollar currency, good for this currency. So on April 21st, that was today. So March 24th was the last time it happened, 49.3. The actual was still greater than the forecast, and it was greater by 2 points, 2.3 points. So on March 24th at 9:45 a.m. is when this report came out on the previous screen. 9:45 a.m. is when this report comes out. On March 24th, so you go to TradingView, walk with me, look. You go to TradingView, you don't go look for the US dollar on TradingView, you go look for gold, because that's what you're trading. You're just trading gold versus the US dollar. So you get the fundamentals on what it's trading against, you see. So you zoom out, you go look for March 24th on TradingView. This is 1 step, 2 step, 3 step, 4 step. Here we are, March 24th. We're on the 1 hour view, so there's 9 a.m. on March 24th. Let's find that. We line it up. Let's go back. All right. Let's see. It's about in there. So we zoom in a little. March 24th. 9 a.m. 9 a.m. This is what happened on March 24th last time with gold when that USD report came out. What happened? It came out, and when the actual was greater than the forecast, it's good for the currency. What currency? The US dollar. So if it's good for the currency and you're trading gold versus the US dollar, then the US dollar is going to go up in value, because the actual was greater than the forecast. It's good for the currency. So now US dollar is going up. You're trading gold versus US dollar. So now gold value has to be doing what? Going down. Just like it did. You see? That's why I was biased on a sell. Because I just paid attention also to how the economy's been going. You have to plug that in as well. Because as I said, I jumped a little too early. I didn't wait for the report to fully come out. I got a little too excited because I just kind of felt like I knew what was about to happen. And I just felt like it's going to be a repeat of this. It's going to crash down to 74 or a green key level or a blue key level, and then it's going to continue to go underneath it. And we fast forward to 9:45 this morning. It looked like the same thing on March 24th, did it not? Well, it was a little bit above the green key level like we just seen, and it crashed down, but it's the same scenario, just a little different pattern. It just crashed down to the key level of green and it went underneath it. It could be trying to bounce back, but if it does, it's just going to probably meet the MA line, and then it's going to continue to go down. The candlesticks are beneath both the MA lines. When this MA line stretches out like this and this one's curving down, you can bet that this is about to drop. So bam, that's what I did. That's everything that I just did. And now you see it took me out. I'm at $5,076. I now have this account in profit. Lost 47 off rip, but I made almost $100 in one trade and just stayed with that same confidence. Like, oh well, I lost that 0.10 lot size. It was $47. If I'd have 0.10 the rest of the ones that I won, I'd be close to passing this challenge in the first, what, 30 minutes of me having the account. But I'll give updates accordingly. Let's see what the S&P is doing. I ain't even added yet. Gold's the only thing on there. It's a 4121. See what they've been doing. You know, we analyze on TradingView. SP, let's hit the 4. Looking like it did the same thing gold did. Looks like it's a report because it was an S&P report. So, as I said, the S&P is going to be directly affected just like gold was. Now, this is the S&P by itself, the S&P index. So, it's a compilation of business and banking industries, the financial industry of, you know, it's a compilation of all of those rolled into one stock. And that's the index. That's what an index is. And this is the S&P. You know, the Dow Jones is the manufacturing, and then the the US 30 is the Dow Jones. That's the manufacturing section of indexes. There's the S&P, which is financial banking portion, and then the NASDAQ, yeah, which is the technology sector. But yeah, as you can see, it's doing the same thing gold did. Came down, touched the green key level. It didn't go underneath its green key level of 4116. It came and met it again though. But it is just like third time testing it recently. This was its first, that was its second, that's its third. So if it comes and touch it again, it will almost certainly break through. I'll give that like an 80% chance of breaking through if it touches it again. So we could, I mean, I gotta buy or sell on that. I could get in on both. But I'm a strong believer in if it ain't broke, don't fix it. So I'm gonna really just go ahead and go back to gold and just wait for it to stop pump faking. It's probably done. But yeah, I'll be back. More profits. Walk with me. By the by, I mean, I just hit sell. I mean, just went in a profit just that quick again. I'm just so biased on sell. I don't really care what level it raises. I'm just going to be hitting sell. Counter trend trading. Scale down to the 5-minute peep. We won't clear this candlestick high. I'll let y'all walk with me for a little longer. It'll come and try to test this. It won't match it. If it does match it, we'll get out the trade. We'll take the loss. But I'm just biased that it won't clear it. It might match it, but won't clear it. If it clears it and settles above it, then I'll get out. But a candlestick has to close above this high in order for me to actually get out of this trade, or just start scaling in. Like I did a 0.7, so you can go down and do like a 0.1 and just get out of that. I'll just do it anyway, just for demonstration purposes. So yeah, you go to where you close with loss, and you go up there to where you raised your lot size, and you just go down 1. So it shows you how much you'll lose if you just take a 0.01 out of that 0.07, and you'll lose 2. So I'll just do that real quick. So now you just raise your margin level percentage a little higher, gives you a little more room to work with in case it does return. You just don't want to get out the trade full. You know, you just want to get out of some of that big lot size. Just do it piece by piece. See, so now you're not mad at yourself for totally getting out the trade, because now it looks like it's about to come your way. All you did was get out of a 0.01, lost $2 and some change instead of the $15 it was. You see what I mean? It's how you trade. This is risk management. So I just gave you some confluence tips and some fundamentals, some technicals, and gave you some risk management. I mean, gave you all that in like a 20-minute video. Walk with me.